Okay, everybody. Let's try this again. Sorry about the last live stream. As you know, it just kind of got cut off here. That's all right. Look, man, whatever it is, it just is. So here we are back again. This is my post-market wrap-up of Tuesday, February 4th, 2025. A lot of stuff to talk about. And that's very interesting here. Algorithmy. Or is the Fed the only buyer? Absolutely. The Fed is the only buyer. That's the deal. They are the lenders and buyers of last resort, and they're getting into the market again. I mean, come on, man. Now, let's just start off with this, man. This morning, prior to the market open, I explained to you in my morning video, the debt market was sending us a bad signal on the back of China retaliating with regard, not just retaliating, but up in the ante with regard to tariffs. There's still 6 days left, and apparently Trump is going to meet with whatever his name, it creature over there is. They're going to have a little sit down. May not even happen. But what was really fascinating to see was right at the open, the 10-year yield, I mean, bang, 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 started dropping. Stocks started to go up. Look, man, we know how this is going to play out. What did the Bank of England just say? Tyler, thank you. I appreciate you. The Bank of England, well, it's kind of funny in a way. They said they will intervene if there's some kind of instability in the debt market. Oh, like they're not doing it already. Every central bank is. They're all in the debt market, buying it all, keeping rates artificially suppressed, period, and driving cash into the stock market. It doesn't matter what's going on here with the economy. Now, let me just show you something real quick. I'd like to think that you and I are the only ones watching action here in the debt market. That's obviously not true. There are others. Now, let me just show you what I'm talking about. This is Market Watch this morning. The 10 to 30-year yields rise as China tariffs retaliation, as inflation concerns, whatever. So, other people are watching the debt market as well. It's the number one driver of the stock market, period, the end. Everything is a derivative. You all know that, of action in the debt market. There's not a single, not one. Thank you, Helen. I appreciate that. And you're amazing. There isn't a single asset class today that has a real price discovery mechanism behind it. You all know that. Who knows this stuff better than you do? When you have this kind of a mechanism with central banks artificially suppressing rates, buying all the debt, devaluing the currency, I mean, there's nothing is real, and it's a crazy spot to be in. We've never seen this before. I've been in this business for a long time, and I've never seen anything like this. Nothing even comes close. So anyway, there are others obviously watching the debt market action as we are. And this was almost like miraculous. As a matter of fact, let me show you what happened. So on the back of bang, let me show you this again. You got the 10-year yield here falling. You got the dollar falling precipitously. Look at this. The MMRI is almost, or maybe it is right now. I don't know. Can you give me someone around here? Give me a heads up on real-time MMRI. Look at this. We're almost sub 300. Tyler, thank you. And on the back of rates dropping, or the 10-year yield, should I say, we got gains. Nothing dramatic here. The market still hasn't gone. It's 302.09. Thank you. We still haven't gone anywhere. This market's gone absolutely nowhere since December 5th, which was the high for the S&P 500. On the back of that, some people tell me, write to me and say, hey, Greg, you're not talking about gold and silver enough. I talk about it every freaking day. Here we go. This is where we're at with the price action of gold and silver. And as you know, people, look, this is a prelude to what's going to eventually occur. These assets are so massively and astronomically undervalued, especially, weighed against global debt that's out of control. It's going to continue going there. The mechanism here of how the price action of gold and silver is manipulated via the derivatives market. What does that tell you? Well, gold and silver price action isn't real. It's the derivative market dictating the price of gold and silver. It's the same thing for everything else. But anyway, that's that. Crypto's under some pressure here, as you can see. Period. The end. You guys are all entitled to your own opinion on that whole thing. Now, I want you to think about this. The market put on gains today, just like we had a beautiful day and everything is fine. But how about this? Factory orders slide more than expecting, signaling continued slowdown in manufacturing. Let me explain this to you. What's missing here? The entire United States manufacturing sector is contracting. It's been in contracting for as long as you want to go back right now. It's just over for US manufacturing. Bring back every single manufacturing plant around the world. They're not getting the orders. The economy is dead. The economy is buried. They may trick you. You may see a trick pulled off where central banks are going, well, the Fed in this case is going to lower rates, which they've already announced that they will yesterday. They're all friendly now. Everyone's having a big party um, with lower rates coming here. And all that means is nothing. We're just going to die faster. Here, job openings fall close to a 4-year low. So here's the economic news today. Pick one. It's all miserable, and the market goes up. Why? The market's counting on more easy money. The more, and it's going to be sold to you. Well, we need this to stimulate. You know what stimulus actually is? It's pulling stuff out of the future growth into the now. It doesn't work anymore. We've reached the moment of maximum saturation, people. You all know that. And it's not a good place to be here, honestly. And you and me really got to continue to take action and do everything we can to make this freak show work for us. So here's something else. European shares decline as trade war fears loom. Here we go. Here's another one. JP Morgan says U.S.-China trade war will escalate. The bar is too high for a truce. People who make under 130,000 are already cutting back on Trump's trade war. You know what? I kind of am sick of, and I'm not defending President Trump here. Okay, you know my take on this. I will give credit where credit's due, and I will obviously, and we all should hold our leaders to account. But they'll keep pointing fingers. It's Trump's win. It's Trump's war. It's about we the people. So we the people are now in some kind of a trade war, and I mean, we'll just have to see how it plays out. Oh, Joe, go. Thank you. But what happened here with you're flipping through the channel. They're talking about Mexico. They're talking about Canada. Blah blah blah, and they're going to strengthen their borders. We'll see if this even really happens. Okay, I think that's why these tariffs have been pushed off for 30 days, and we all win here. You know that we do not want tariffs. There's a big misunderstanding here. Tariffs are not paid by governments. Okay. They're not. You don't believe me and you think that Greg is wrong, look it up for yourself. Tariffs are paid by importers and exporters, and the increase in prices are passed on to you. It hurts we the people. It doesn't do anything else here. It does hurt. I mean, obviously what it does by hurting the consumer, by having them pay for more, it hurts the economy and the corporations can't profit. That's in a roundabout way. I guess you could say it does kind of affect big business. But the corporate agenda is going to be fulfilled here. And I sincerely believe that if look, man, with this China issue and the UK and the European Union, however it's going to play out with tariffs, it's degrees of losing. It really, really is. No one's going to win here. And tariffs aren't going to pay for anything. We were told that Mexican tariffs were going to pay for this and Canadian tariffs were going to pay for that. But now there isn't any tariffs. I know if we do get, no, with China, it's a zero-sum game. I mean, we got tariffs on them. On the 10th, they're going to hit us back and then some. So how did we gain anything from this? So anyone telling you that, I know there is some people from Trump's administration trying to sell you. That ain't true. It's just a lie. And when you hear that kind of stuff, just laugh, because the old are going to tell you. Jeff Rowe, it does seem to be a bargaining tool. It absolutely does. But with Mexico and Canada, come on, man. Anyway, it's too much. And even the market called it before it even happened. If it's going to be a bargaining tool with China, let's see how that one plays out, okay? Regardless of if you may think it's a bargaining tool, Jeff Rowe over there. We the people pay for it. It's a bargaining tool that you pay for. Understand? In my opinion, true and real diplomacy should be utilized before we the people have to pay for another thing, because that's all we do. You, Jeffro, who asked that question or presented, this is a bargaining tool. This is Trump's way of doing it. Did he tell you were going to pay more? Did he tell you that? Actually, he did say that. He said you were going to suffer. And Elon Musk, the vice president, said, I'm goofing. Don't let that trigger you. I like to say that. He does pull a lot of strings around here, Elon Musk here. But he told you, too, that if Trump is the president, that we were all going to suffer. But, all right, did you vote for that? You want to suffer? You want to pay for things? We always pay for it. You all know that. Look at the cost of eggs. And you think this is it? You really feel like this is all you're going to see? Now, people, I'm telling you right now, we're going to see exactly what we're seeing now. First of all, if you're making under 130,000, I would say that's probably a lot of you out here. You're in a lot of trouble already. With regard to the economic news, this is not going to stop. This is not going to stop. Okay, so just be ready for that. Lori, thank you. I appreciate that. We got to start making our own moves outside of the realm of what our leaders, which we really do need to hold to account, are trying to push. Whatever their agenda is it yours? Do you not feel like you're already paying enough for everything, or is the currency not devalued sufficiently enough that you feel that maybe you need to pay a little bit more? I mean, come on, man. Really, you really got to have one functioning brain cell to put this together. This is obviously not a democracy. It's not even is it a representative democracy? I guess that's debatable as well. But the fact of the matter is, I don't think any of us want to pay for anything. Thank you, Jonathan. I appreciate that. Yeah, you're right. Economics. See the middle of that word? Con. It's a con job. Oh, don't worry, things are going to get better, but it's got to be worse first. And I'm going to bargain. I'm going to use tariffs as a bargaining chip. Forget diplomacy here. Okay, this is obviously some kind of demented form of diplomacy, just like war and airstrikes and everything else is here. Well, but true statesmen should be able to sit down with each other, and we don't have that anywhere in the world, obviously, and discuss what's good for we the people, so we don't have to fund it. Does that sound about right to you, or is Greg way off? I mean, come on, guys. It's too much. It's just so obvious to me. Anyway, so that's kind of like where we stand here with this whole thing. It doesn't appear, after we witnessed this today, look, man, there's a few things in play. Okay, we always got to consider that the dynamics are always askew somewhere. But the central bank, in this case the Fed or central banks collectively, do appear that they will get in here and continue to rig the debt market to intervene in instability. Now, I'm going to say something else just real quick. I want you guys to pay attention to this. The system is drying up with regard to liquidity. There's just no doubt about it. We exist in this black hole that you and I have spoken about forever. Jeffrey, thank you so much. I appreciate that. We're existing in this alternative reality built upon, again, oceans and oceans and oceans and oceans and oceans of debt. And of course, we're all paying the price for it. And we're going to see, again, the price of everything continue to rise with or without tariffs. We're still going to get hit with dollar devaluation, currency devaluation around the world. My European friends, everybody, we're all going to get hit with this wherever you are. That's the mechanism of central banking. It's how they're extorting, and I'm using this word on purpose, how they're extorting control out of the people, creating dependency on the system. Does this sound familiar to you? I've only been telling you this, guys, for I don't know how long. Honestly, it's just going to go on and on and on and on and on. It's not going to stop. Until we get rid of central banking, we lose. I don't know another way to say this to you. We need a leader somewhere on this planet with enough guts, with enough balls, that will get us out of this fiat, so may it be, monetary system that it's debt-based. It's completely debt-based. It only functions because of the relentless acquisition of it in perpetuity. Imagine, Jonathan, thank you. I appreciate it. It is already hyperinflation. I mean, who could argue? The dollar's already lost 98% of its value. I would say that's hyperinflation. And this is going to get much worse because we're going to see other things too. We're going to end up seeing some other event thrown at us, whether it's another COVID, whether it's more war, whatever it is, and we're going to start to see supply chain disruptions. Remember what I'm telling you. We're seeing this mechanism to create more and more dependency on the system, not freedom from the system. We can't be freed from this system because we're living under the rulership of these central banks. Again, if we had a real leader anywhere in the world that would get us off of this system, but we can take down one central bank, just one. They start to topple like dominoes. You know that. How do we prevent this from happening? It's the easiest thing on God's earth. I said the God word again. Whenever I say God or mention God Almighty, I get people that unsub. Go away if you need to go away if that hurts you that badly. We don't need these kind of people here. I think you guys and girls would agree with me on this. But these institutions, man, they're destroying us all, and they're colluding with politicians now. Trump and the Fed, they're best friends right now because why? The Fed said lower rates are coming. We know they are, and that just means currency purchasing power destruction. We already have people. Oh, here we go. I'm going to melt down. We already have a situation globally where global bond yields at historic lows, and the economy is melting down. Are you expecting this to change because rates go lower? Really? If you believe that, you'll basically believe anything. We do not need this. I don't know another way to say it. And the mechanism here, again, with global debt out of control, or in control, depending on how you want to look at it, because it's only going much higher. Smaller moves with regard to benchmark bond yields are going to have a more magnified effect, at least in my view. In other words, if we start to see, let's say, the MMRI reverse, like this morning, we were on our way up this morning. We were on our way up this morning. Market wasn't happy. Market was not happy. Then all of a sudden, we come down just a little bit. Bam, market's happy, green across the board. So I would imagine that we're going to see, again, more intervention in the debt market by central banks because they are not going to allow any kind of instability to affect the stock market. Why? It's the 1% and 2%ers. Let me tell you something about the 1% and 2%ers. They're not happy right now because the market has gone nowhere in the last 2 months. And then with regard to the 1% and 2%ers who own the majority of the stock market, more than likely they're going to be the first ones out here, as you and I. I mean, we're out already. You and I got out of this market at the exact moment we were supposed to, at the top. Do you realize that? Who else nailed that to the wall better than you and I? Nobody. Zero. Not even a major Wall Street institution, but we did. And why? Because we're watching the debt market. Why did I get out of the market? I told you all at that time, I said, I don't like what I'm seeing here. Where's the market gone? Nowhere. There's going to be a way to get back in. And I really believe what I'm saying here. This is what we're going to see. It's pretty obvious. More intervention in the debt market like we witnessed today. They're not going to allow this to get out of control. Could I be wrong? Yes. It'll go on until a point of their choosing. We're going to get lower rates from the Fed. That's what the Fed told us. That's when they floated that bull tard, their go-to guy. Oh, I don't like that, man. I really do. I hate any creature that lies out of every orifice that they have and expects you to believe it here. Oh, they again, bulltard yesterday. Inflation is going to come down. How long have we been hearing that? Is anybody being held to account here? Anybody? I don't know. Jonathan, thanks again. We're in something yet to be defined here, man. This is, people can't get by. I mean, just do your own research on this. Food banks here in the United States are being overwhelmed. People in my own neighborhood, and I live in a decent place, struggling here, losing their jobs as well. It's it's a bad, 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 bad place here. So we're going to see more intervention by central banks in the debt market. We're going to see lower rates as well, which is obviously intervention in the debt market. Currency devaluation, which was my number one theme moving into 2025, which is a wrecking ball for the middle class, a wrecking ball for the economy. Just expect more pressure. The middle class, regardless of what's happening now, and a lot of it's good. Okay, we're going to get squeezed, squeezed, and squeezed, and squeezed, and squeezed. You understand? It's too easy to see these things unfolding right before our very eyes. But look, man, that's kind of what we got going on here. What happened to Greg Hunter? Did something happen to Greg Hunter? Look, man, I haven't talked to this guy in years, but I still care about him. All right. And I really do. You have no idea the lengths I've gone through to try to reconcile with this guy. He does not practice what he preaches. All right. Whatever I've done, I've asked for forgiveness 1,000 times. He just doesn't want to forgive or whatever. Maybe he does forgive. I don't know. Maybe he did. He just doesn't want to talk to me. That's okay. But I'm telling you, if Greg is still around, I believe that we are stronger together, honestly. Lord Humongous, I think, is gone, Loretta, unfortunately. The guy would never leave us. He had our backs like in forever. Oink, man. Yeah, did they float him out yet? Anyway. Yeah, I know he had heart surgery, but that was a while back. Anyway. Do you guys and girls want to cover anything specifically before we get out of here? Honestly, I think we covered a lot here. Let's just keep our eyes on a few things. It looks like the rigging is going to not only continue, but it looks like it's going to get more extreme, at least for a while here. I don't believe they got enough people trapped in the system here, even though we're being bridged into a new system. Again, this all plays together. We're not being made the constitutional money capital of the world. We're being made the crypto capital of the world. I would want to believe that 90% of you want to be returned to a constitutional money system. That's not where we're going. What we're going to see is more dollar devaluation. Thank you, Jonathan. Again, I don't own mining stocks, bro. I don't follow them, so I really can't give you any good advice on these things. I'm sure there are some good companies to own. I don't do the research. I'm not honestly qualified to do it because I don't do any research on mining stocks. I want to own the hard asset. You know that. Anyway, that's kind of my take on miners and mining stocks. I really don't know. I only talk about things I know. I talk about things that I do a lot of research on. I'm a big picture guy. You know that. Anyway, that's kind of where we're at with the situation. We're going to see more people, unfortunately, suffer. Being the mechanism is create dependency. And look, this bridge that is rapidly being built into a new system. Again, dollar devaluation and a world here that is de-dollarizing. Madison, thank you. Look at that cute little devil over there. Are you a devil? Anyway, guys and girls, I think we kind of reached the top on this one, and I want to thank all of you for being here. I want to thank you for your support and those thumbs up, and you guys getting this work out there. All right, so kind of that's it. I think we're good, right? I love all you guys again. Thank you for everything. Honestly, you're just amazing, all of you. I will see you in the morning. Let's just continue. We're not going to stop doing what we're doing. We've been on the right track, people, for a very, very long time. With being out of the market, I have very little cash. I'm 90% out of this market right now. I have almost nothing in here right now. No real dividends to talk about with regard to JEPI, JEPQ, or anything like that. I like the cash flow, but we got to pick the right spots. Here's what I say, guys and girls. Listen, for those of you, and I get hit every day. Greg, when are we getting back? Greg, when are we getting back? Greg, when are we getting back? I already told you guys and girls, and I repeat myself a lot because I get a lot of the same questions. I'm in no rush to get back in here. I want to see the S&P 500 above its December high. That's number one. Number two, and this is not a lock. Number two, I would like to see the MMRI sub 300. Again, it's just rigging. It's not real. We're taking advantage of a market that has no bearing on reality. We're taking advantage of distortions. That's what we're doing. You understand? But we gotta play it right. We have to allow. Listen to this. If you take this away from the market, write this down. Ready? Allow the market to come to you, not the other way around. You understand? Allow the market to come to you, not the other way around. There's a lot of people who are fear of missing out. Just don't play that game. All right. Let the market come to you. All right. Not the other way around. Love you all. Again, I will see you guys and girls in the morning. And if you got something out of this video, I'd love to hear from you. Thank you for those thumbs up. If I have earned you a thumbs up, I'd appreciate one as well. All right. That's it. See you in the morning, people. Enjoy the rest of your day.